You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it is time once again for the Crypto Rundown, the program where we dive deep into what is cooking over there on the crypto side of the fence. So we're going to talk the futures, the options, some of the spot, kind of hard to avoid that latter as well as, of course, all the volatility, the volume, the OI changes, the SKEW, all the good stuff that makes up the Crypto Rundown. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. Hope you guys are set to go. A lot popping off in the world of crypto and indeed crypto derivatives. And joining me to help me break it all down is a returning guest on the program, even though it's been a little while. He is Jason Urban, the CEO over there at DRAWBRIDGE Lending. Jason, welcome back to the Crypto Rundown.
Great. Thanks for having me. This is exciting times to come in and have a conversation about the space.
Yeah, you know, a little bit of auspicious or perhaps inauspicious, I suppose, depending on your perspective timing here. Of course, last time we chatted, you and I was back on, I believe, last June 10th. So it's been a little bit. Also, we had a chance to do it in studio. I think the recent coronavirus outbreak putting the kibosh on the in-studio appearances for the time being. Don't worry, we'll get back to those. So hopefully when it all settles down, listeners, we'll be back to the in-studio. But for now, everyone's joining us remotely, which I think works better for everyone right now. And I think with all that said, let's dive right on into a little bit of the old Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, welcome to the Bitcoin Breakdown, the portion of the show where we break down what the heck is going on in the world's leading cryptocurrency, a.k.a. Bitcoin. And we're going to do all that in a second. But before we get to that really quickly, Jason, since I know we get an influx of new listeners to this program all the time, so there's quite a few new listeners listening right now who probably weren't listening back in your initial appearance in June. And they're probably saying to themselves, DRAWBRIDGE Lending, what the heck is the lending guy doing here on the crypto program? Why don't you break down what it is you guys do over there at DRAWBRIDGE, sir?
Absolutely. So if you think about the lending in the traditional sense, people have margin calls. There's things like that where coin gets liquidated and topped off. Where we are a little different is we will lend fiat and then we hedge the position using options. And that allows us to have times like we've seen the last couple of weeks where these adverse price movements don't affect our clients and they don't affect us. So we use derivatives to basically do the work of margin calls and things like that. So at DRAWBRIDGE Lending, you'll never get a margin call. and we try very hard to offer rates as low as possible. Now with rates at zero, that's always a challenge, but we can approach zero or even do zero if the market conditions are such.
I know you guys at DRAWBRIDGE have a deep bench of both former CME and CBOE guys. Which one were you, Jason? Refresh my memory.
I did a little bit of both, but most of my time was at the CME.
I won't hold that against you at all here, sir. But that of course puts our conversation in perspective. A lot going off on that neck of the woods here too. Let's kick it off without further ado here. A lot, I think, to put it mildly, listeners, a lot has been happening in the crypto space since our last program. Most prominently, we've seen this sell-off continue and indeed exacerbate. For a long time, the talking point, the question in the crypto world was, what really is it? Is it inversely correlated? Is it uncorrelated, the way a lot of people thought it was for some time? Is it positively correlated with the equity markets? A lot of people for a long time had kind of coalesced around that non-correlated, uncorrelated, really, that column. And yet, of course, I've often said many times on this program and others, you only have jokingly, when it all hits the fan, correlation tends to move to one. And unfortunately, for everyone who thought of crypto as an uncorrelated asset class, that's exactly what we saw over the course of the past week. A pretty massive sell-off. Coming into showtime, last show, as you recall, we were down about 1,900 handles on the last show. Now, this week coming in, we're off right now right around 2,700 from where we were this time last week. Of course, that's not as low as it got. No, the limbo bar, unfortunately, got a lot lower. Bitcoin breaking through the 4,000 level ever so briefly, including a big sell-off last Thursday where the worm really just seemed to turn, not quite out of nowhere because the markets were selling off too, but I don't think anyone anticipated the extent of the drawdown that we saw. Pretty much a 21% crash. Think about that in broad equity terms. Obviously, we have circuit breakers out there, and that's given rise to a debate about circuit breakers in crypto. We'll get to that in a second. But imagine if we saw a 21% intraday sell-off in the S&P or the NASDAQ or the Dow. There would be hell in a high water. People would be outraged, and there would be hue and cry. And yet we saw that intraday, and then it ended up losing 31%, over 31% on the day. So we saw it dropping from about 5,800 to 4,100 or so, 4,140 or so in the matter of not that long at all. So rough times out there. We saw major venues out there, including BITMEX. I know a lot of you like to play on BITMEX, particularly a lot of our overseas listeners. BITMEX was offline on Thursday. They called it for maintenance. A rough time to be. Just admit what you're doing. Don't try to sell us on the maintenance. They were off for about an hour. Of course, they're not alone. We saw a lot of traditional equity options brokers and brokers in general, like Robinhood and others, even big ones like TDs and others, having some issues on their platforms. Robinhood, the most infamous for having multi-day outages, which is completely unacceptable. So BitMEX only having it for an hour, but still, it's been just quite mad times overall. So Jason, like I mentioned at the top of the show, this is somewhat interesting, indeed auspicious time for you to be joining us on the program. You kind of touched on it a little bit at the top of the show there, but walk us through what the last week has been like. Were you getting panic calls from your clients or when that massive sell-off happening last Thursday and last Friday? And what are your thoughts on what we're seeing out there in the crypto landscape right now?
Well, our business has been growing, as people start to get a comfort level with what we're doing and how what we're doing isn't really all that different than what happens in a lot of other asset classes. We've been getting a lot of calls and a lot of activity. Last week when things were, last week and obviously, today early on, all our clients feel very comfortable with the structure. All our lenders feel very comfortable with the structure. And so at the end of the day, we're not getting the panic. We're seeing people coming to us because they don't like the forced liquidations they're going through, in other aspects of the crypto universe. And so business has been pretty good for us. We're hedged. Obviously, anytime there's a massive dislocation like this, you always worry about your counterparties. Obviously that's why the CME is with their product, ICE and BAKKT with theirs. You feel more comfortable because they're there. But we've been pretty fortunate in that we do a very extensive credit check on our counterparties and make sure that the people we're trading with have the wherewithal to stomach these kind of moves. And the moves have been violent. As you mentioned, the other night when we broke 3,900, I think a lot of that was forced liquidations. As you talk to people in the business, in the street, a lot of these OTC trade desks, we're seeing lenders having forced liquidations as we broke certain bands. And that just kind of, you're short gamma. And from an options perspective, anytime you're short convexity or short gamma, whether you think you're short it with options or you're short it because of your business model, there's going to be pain. And there's no way to really, the only way to fix that is to buy that gamma. And so I think a lot of these liquidations and these violent moves have been people short convexity. And it does really feed on itself. So when there's no bid in the market and you're trying to sell, no matter how slick your algorithm is, I think it's really difficult to get your size done.
And you kind of mentioned there that you guys are hedged, so it's not as much of a concern for you. I think one of the interesting things about what you guys do, one of the reasons why I wanted to have you guys on, is that a lot of your lending activity is actually driven and indeed gauged around the liquidity you guys can get in the option space to help offset that. Let's go over that again really quickly, because like I said, you were on last quite a while ago. Give our audience a kind of brief overview of what you mean by saying, hey, we're hedged out there, and how you guys lean on the options to actually provide the liquidity to drive and indeed fund your lending activity.
Absolutely. So if you're a holder of digital assets and you want to monetize and you need cash, you'll come and you'll ask for a loan to value. Some people will do the loan to value on a fully collateralized basis and it's 1-to-1, but then it gets kind of hairy there. What we do is we'll offer a loan to value in the 50 to 70% range. And then based on where we're making that fiat loan, we'll go out and hedge that risk in the market. And so from that standpoint, if let's just say Bitcoin is $10,000 to make the math easy, the good old days, right? If Bitcoin was $10,000 and a client wanted to borrow $7,000 against that, or a 70 loan to value, we would then loan them $7,000 and go out and buy that 7,000 put either on exchange or OTC with our vetted counterparties. And then what we do is we create some kind of income by selling a call. So we're doing a collar or structured product, and that allows us to create the income to buy the rate down low. It's a very old structure. Takes a lot of legal and regulatory oversight to get this done. It took us a long time to get that established. But by doing this, we can ensure that the client will never have a margin call. The loan is non-recourse, and the options are effectively what allows us to make the loan non-margin callable and also non-recourse, as well as a low interest rate.
And, obviously these are somewhat unprecedented times for the markets. We've had multiple circuit breakers triggering in the broad equity space, volatility through the roof, VIX spikes all just hitting ridiculous levels of volatility. We're seeing now trading floors shutting down. Most major options markets are going fully electronic for the most part, with the exceptions of a handful out there like Amex and the Pecos out there. So walk us through what it's been like for you guys trying to get your options hedges and your trades and your collars off in these environments. I know we have a listener question about this a little bit later, but let's just get to it now. What are you seeing out there in terms of liquidity, and how is that impacting what you guys are doing out there?
So like any move like this, so if you think back to 9/11 or you think back to 2008, when there is dislocation like this or when there is stress in the market, obviously liquidity shrinks. But I think that you'll find that what we've found is that the liquidity is still there. It just might be at a different price, or it might be in a different venue. So from that standpoint, it's you really have to kind of call around and look for it. But the liquidity is available. You can still certainly do transactions.
Well, that's good to hear. Of course, it's been not that broadly available, even in the broad options space, as well as we trigger multiple circuit breakers here and there, and many liquidity providers having issues making tight markets, which is understandable. These are what we used to call back on the SIBO days the quote-unquote fast markets, and we're pretty much all living in a fast market right now, which has raised an interesting debate. I'd like to get your thoughts on this as an old-school CME and indeed SIBO guy there, Jason. We've seen, of course, with the floors, trading floors at least, shutting down. We'll get to all that in a little bit with our poll. But right now, folks like CoinDesk and others, and a lot of people in the crypto space are saying, man, we wish we had some circuit breakers in the crypto space, which is interesting and indeed odd and indeed a polar opposite to what we were hearing out of the space not too long ago, where the push has always been away from regulation, away from a centralized marketplace. And yet in these days, when it all hits the fan, folks tend to wake up to what some of that type of oversight can provide. In this case, it would have been at least some sort of stopgap along the way so you don't see the 20 plus or indeed 30 plus % sell-offs out there. Some people out there, like in the CoinDesk article, they include some folks from Multi-Coin Capital, I believe, saying the crypto market structurally broke and leading exchanges need to work together to prevent a repeat. A strong argument for industry-wide circuit breakers. Otherwise, we just all need to accept that crypto can drop by 60 plus % in a day. I don't know if we got that far. I saw 30 odd %. I don't know if we got 60 odd % in a day. And he said that severely limits the usefulness of this technology going forward, which is an interesting point. And again, as you know, as the crypto markets are growing up, trying to become big boy markets, these are the kinds of debates that people are wrestling with. I'm curious for you. You come from a more traditional financial background. Not that derivatives are in any way traditional, Jason, but still, compared to crypto, they're a little bit more mainstream. What are your thoughts? Do we need to have a little bit more protections in place out there in the crypto landscape, or do you like the way it's set up right now, a little bit more laissez-faire, Jason?
Personally, as a lender or as someone who's dealing in money in the space, more control or more or less uncertainty is always better. I think your point about the whole ethos of the industry or the ecosystem was deregulation and hands off, but I don't think you're ever going to get traditional players to really fully commit unless there are some controls in place. And I always use the saying, do you want to be right or do you want to be happy? And I think the people in the crypto sphere I think at the end of the day, they'd like to be happy, and being happy means larger players being brought in, allowing new money, new capital inflows, the price appreciates, new developments happen. I think that's a positive, but that only comes when there's defined rules. And this no rules universe that we're in doesn't lend itself to big traditional players really stepping in with full force. They may dabble and they may nibble, but they're certainly not going to commit sizable chunks of capital. And so, I would be very pro having circuit breakers. Unfortunately, I don't know how you get that done. I don't know how, given the fact that you've got 20,000 venues or whatever you want to call it, where people can transact in these things. How do you regulate that? If there's a circuit breaker and it only goes off at 70% of the places and the other 30 are still trading, that panic sets in. It's just, that's the difficulty that happens in that space. And I just don't know how you get it done. It'd be great to see it happen, but I don't necessarily seeing it happen.
Doesn't lend itself. I see what you did there, sir. I didn't know I was dealing with a punster here on the program. But you're right. We've heard this before from a lot of large institutional players and those who deal with those players, that we do need some more controls in place to really make it an accessible or indeed even a desirable playing field for some of these large players. And I know a lot of the crypto devotees out there, they like to say we don't need them out there. But if you want to have a really size accessible, liquid, deep marketplace, then you do need some of those players out there, and they require more controls than at least we've got right now. Just imagine if the S&P was off 30 odd % in a day, what kind of havoc there would be out there. So thankfully we haven't seen that in the broad equities, not quite there yet in the crypto space. What do you guys think? Do we need circuit breakers out here? Might be a good poll question for us. Once our other one expires on the trading floors, maybe we'll add that one out there this week. So many questions we can ask you guys this week. Let's get on out there to some of the analytics we're seeing out there, the vol and all the other good stuff. A lot of this data, courtesy of our friends over there at SKEW.com. Realized vol, as you might imagine, we're looking at a nice 30-day realized vol level. And we've been saying for a while that 30-day frame of reference hadn't really caught the beginning of all the madness, all the mails from all the sell-off. Well, now it has. We've ticked into the beginning of that because guess what? Our realized vol is up quite a bit since last show. It's up to about 187%. That's up from 54% last week. 1 year-on-year realized vol also up to about 87%. So it's a very structurally volatile instrument these days. Bitcoin 30-day implied, so what the options markets are actually pricing in from an implied volatility perspective is at a similar level. It's up to about 168% from 66%. That's kind of scary when the realized is over the implied, but that's kind of where we found ourselves briefly out there in the Bitcoin land. Let's look at the volume out there on some of the biggest venues like DERIBIT. Big days out there. The biggest day was on the 12th, not surprisingly, last week. That's on Thursday, where we saw 248 million worth of notional changing hands. Prior to that, it was far less than that. So our 30 million benchmark getting blown out of the water out there these days on the 12th. The 12th also a good day for the OK exchange, OKEX over there. Did about 43 million. It's pretty much double what their previous record for notional was as well. Kind of a light day on the 12th for CME Bitcoin options, only about 1.2 million in notional going up out there. Other big days for Deribit over the past week. On the 13th, which is Friday, they did about 98 million. So far cry less than Thursday. And on the 9th, Monday, when we opened up down for the first time, that's when we saw 170 million worth of notional hitting the tape. What are the big prints there over the course of the past week? One of the larger prints, nearly 400, not a ton, but still a decent-sized trade for Bitcoin options out there, was the March 1,400 calls. Paper selling those. Maybe some overriding going up against one of your callers there, Jason. Who knows? But that went up on the 14th for when Bitcoin, well, it was at point, the price they got, again, shows how little value is in these calls, 0.0005 Bitcoin. And this went up when Bitcoin was at 53.82. Also saw about 100 of the March 1,300s going up at around the same time. Paper also selling those. Look, they may be selling a bit of a strip there. And that's not far enough out for you. They also went out to April on the same day, right around the same time, and did 100 of the April 24,000s. They didn't get much for those either. Though they got, looks like a similar level for this price, the 0.0005 Bitcoin there as well, at a similar level, which is interesting. You could sell the April 24,000s for the same level as the March 14,000, a 10,000 handle difference there. Interesting stuff. The big trades on the tape today out there in Deribit land. March 4,000 puts. Again, we broke that level last Thursday. There's over 1,000 of those have gone up. About 1,100 have gone up on Deribit so far today. 526 also. The March 7,500 puts now pretty deep in the money puts. I'm going to guess some of those probably closing. And the March 32 half puts. If 4,000 is not bearish enough for you, the March 32 half puts going up nearly 500 times today as well. SKEW, as probably could guess, puts firmly leading the dance. It was negative, which indicated the calls were in the favor. Now it was positive last week to 5.1%, which means the puts were leading the dance this week up to about 10.5%. So puts still firmly in charge. I don't think that's going to surprise anyone out there. The call to puts taken over, as you might expect as well. Last week calls were just ever so slightly in charge, about 55%. Now they're down to 45%. So puts leading the dance out there. Open interest numbers out here. Kind of been interesting to watch. They've kind of fallen off from late or early to mid-March, really. They're still looking pretty good, but not at the levels they were north of 800 million just a few weeks ago. Right now, Deribit still the number one with about just a tick, a couple of million shy of 500 million. So we've got around $500 million for Deribit. Then we've got number two, actually OK Exchange, taking that number two spot away from LedgerX with about 44 million. LedgerX number three now, 26 million. And then CME at number four of these big venues that Deribit, or I should say SKEW at least tracks, 8.5 million, and BAKKT 155,000. We'll have to get OI numbers from BITMEX out there so we can kind of compare and contrast them in there as well. But they're not included in this data, unfortunately. Moving on down to Bitcoin options. Oh, before we get to that, where the largest OI is centered right now out there in Bitcoin options across all the venues. It's end of March contract with nearly 45,000 open across all of them, which is slightly more than last week. Not a big change there. So it's still pretty much all March all the time. The next largest contract in terms of OI is the end of June contract with about 23%, or should I say 23,000 contracts open there. Over there on CME land, again, a quiet week on the options front. We'll get to the futures in a second. A little bit of a different story there. But the biggest day was on the 9th. That's why I mentioned kind of the volume they did back then here with, I don't have it here, but yeah, the volume they did on the 9th in terms of notional was a little bit north of 2 million. Looks like about 2.25 million or so, 2.1 million out there notional. That was the biggest day. Even on Thursday, they didn't do a ton. They did shy of 2 million, about 1.25 million notional. And so far on Friday, they did a similar level, a little bit shy of 1.5 million notional. Worth noting, the big trade out there on CME on Friday was 51 lot of the March 5,000 put. So if you're curious what was going on out there, that's what's going on out there. Going out to the futures, pretty decent volume on the futures. Remember, it's been a weird narrative for a while. The futures weren't doing much and the options weren't doing much. It was kind of strange. Now the futures are backlighting it up again. Almost 15,000 on the tape today. Thursday and Friday of last week were pretty active days, both doing about 18,000. And Monday, the first big sell-off day, you saw about 11,000 contracts on the tape. Heading on out to BAKKT land, our friend the BAKKT volume bot showing us here for the week. Total volume about 46 million in terms of notional. The max open interest that's actually off 11%, and the max open interest off 13% down to 8.1 million out there in BAKKT land. And the options pretty anemic, about 133,000 I think in open interest. That's not stopping BAKKT from raising a ton of money though. They raised 300 million in a new funding round to continue developing their digital asset services. Said their new CEO, remember their previous CEO is now a U.S. Senator from the state of Georgia. They say they closed the funding round on March 13th. They've now raised $482.5 million out there. And again, comes from, not surprising, a lot of it from their parent company, ICE, but also Microsoft Venture Capital and a few other, Boston Consulting Group and a few others out there as well. So BAKKT not doing a lot of volume, but certainly raising a heck of a lot of money. So raise a lot of questions of what they're going to put that money towards. Certainly poised to do some paper out here. I know, Jason, you play a lot in the listed space on the options side. Have you been, since you've been on, we've seen back in June, we've obviously seen the launch of the CME Bitcoin options. We also saw, since you left, the departure of SIBO from the Bitcoin future. So a little bit of interesting developments on the listed derivatives front in the crypto space. I'm curious your thoughts on what we've seen so far on both the CME Bitcoin futures, which were doing really well, gangbusters, and kind of dried up for a bit, and now are doing well again, and the options, which never really seem to have found their footing yet. Are you surprised by either of those?
No, not at all, to be honest with you. I think on the future side, you're seeing a lot of these liquidations, and people are using the future as the easiest, fastest way to enact that. And so that's why I think the future volume is growing. As far as the options volume, we know a lot of the professional trading groups who you would know from, the CME and SIBO days of options trading are now starting to foray into these listed options on exchange. I think the timing of this meltdown, when you're looking at the space and it's all hands on deck, the new product sometimes gets pushed to the back. And I think in time you'll see, similar uptick in volume in the option space as well.
Well, let's see what kind of uptick in volume we're getting out there in the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody, welcome to the altcoin universe, the portion of the show where we break down everything going on outside of the world of Bitcoin, except for right here where we break down the top 10. Remember, the overall market cap numbers, take these with a bit of a grain of salt, maybe a large grain of salt. But still, I think percentage-wise, they're kind of interesting. A lot of moving and shaking going on in the top 10 out here in crypto land. As you might imagine, over the course of the past week, we're seeing the market cap of Bitcoin slashed, I think is a technical term. It's down to about 92 billion right now, just closing on 93 or so. If you're curious, frame of reference, it's at its highest, at its peak, it was 241 billion. So way off those highs out there right now, but still closing in on 100 billion out there for the number one spot. Number two, ETH, another one that has fallen off quite a bit. We'll get to that in a second. It's about 12.6 billion. Then XRP. Oh, how the mighty has fallen. XRP, we were talking not too long ago. Is it going to break 30 to the upside? Nope. Now it's threatening 10 cents to the downside. 6.3 billion there. Number four, Tether, 4.6 billion. Number five, Bitcoin Cash, about 3.2 billion. And then we drop off there. Number six, Litecoin, a little over 2 billion. Seven, Bitcoin SV, with about a little bit over 2 billion as well. Number eight, EOS, 1.7 billion. Number nine, Binance Coin, about 1.5 billion. And round out the top 10, Tezos, 950 million out there. If you're curious what some of the better performers were out there in the Litecoin space, it was actually Leo. Not a coin I watch on a very regular basis, but they managed to buck the trend, only lost about 3% when everything else got pretty much annihilated. So it briefly, I think, even crossed into the top 10 in market cap out there. So interesting from that perspective. Let's get out there to the number one altcoin out there, which is, of course, ETH. ETH taking a beating coming into Showtime was at about 112.5 or so. That puts it down, about 82 handles from where it was last time. Last show was threatening 200. Now well shy of that there. We don't have a chance to really parse. We can do it maybe live here really quickly on the show if we have it up here. Do a little bit of the ETH analytics. Again, you can find all this courtesy of our friends over there. SKEW land is head on the drop down and hit the Ether options as opposed to the Bitcoin options. Let's look at open interest right now in ETH land at about 28 million for the options. That's actually not bad. Given what we've been seeing out there overall volume-wise. The big day for ETH options on Deribit, at least, not surprisingly, the 12th, Thursday, 12 million notional. That's pretty high for them. They've been averaging, that's about 3x their ADV of late, so that's a pretty aggressive day. Every other day was pretty much at that ADV or maybe a little bit shy of it. In terms of vol out there, just look at the 1 month implied, you're at about 182%. That number sound familiar? That's kind of what we're seeing across the board here for Bitcoin and for ETH. They're both hovering around that level. And the 1 month realized out here in ETH, even higher, nearly 240%. The 1 month SKEW, kind of similar to Bitcoin, right around 10%, 9.2% positive. So that's in favor of the puts out here. And really quickly, let's look at some big trades. Actually, size-wise, we're seeing some bigger trades. Now, this is a smaller contract, mind you, than the Bitcoin contract. But the big prints out here, there's some 1,000 lots. Paper buying the 280 calls. In case you're wondering, like I said, Bitcoin company Showtime was at 112.64. So someone buying the 280 strike calls 1,000 times there on the 14th. Bit of an optimistic trade. A lot of buys here, actually. A lot of 1,000 lots, too. Paper selling 1,400. The SEP, 400 calls. And they got 0.065 ETH to do it there when ETH was at 131.62. So some very interesting and sizable trades out here in all things ETH out there. If you're wondering where the action is, ETH from an open interest perspective, it's March as well with looks like about 134,000 contracts out there. Do you guys play it all in the altcoin universe there, Jason? Or are you pretty much firmly 100% on the Bitcoin these days?
No, we definitely will lend in any place where we can find an options market with a credible counterparty. So we do quite a bit of ETH loans, and ETH. We have a product that produces yield, and we use ETH for that as well. And any of the top 10s, Bitcoin Cash, BSV. So we're not Bitcoin. We're not Bitcoin maximalists. We're more. We want to provide a service, and if somebody has value in a digital asset, we have ways to help unleash that. And so, yeah, we'll deal with altcoins. We'll deal with anything.
So obviously you got a pretty decent options market. I kind of just broke it down there for ETH. Once you get beyond ETH, though, it's got to get a little tricky. Walk us through how difficult it can be to put together some hedges in some of these other altcoin where, shall we say, the options market for hedging not as robust.
No, it is not as robust. And it's kind of more of a maker's market in that sense. So, if we have a client who's long a particular holding and is looking for some kind of a loan or some kind of a yield, we're able to call around and ask around. And there are a handful of respectable counterparties that will do that. But it's certainly not nearly as liquid as you'd see, in, say, Bitcoin or even ETH, where, after that it falls off drastically. And so it's few and far between where you'll find guys that are willing to step in and do something. Yeah,
you probably have to hold their feet to the fire out there a little bit. I have to know, I'm curious, XRP obviously getting annihilated again this week, down about 6 cents. It's around 14 cents or so. So forget the 30 cents to the upside. It's down around a dime now. You're threatening to the downside. I'm curious. Are there people calling up do you guys have to go try to source options liquidity in XRP? Kind of hard, I'd imagine, in the 14-cent contracts, sir.
You know what? But surprisingly, we have quite a few people who do. So we have a lot of holders who have large XRP holdings and are looking to monetize that, or do some kind of call override or some kind of a structure that will give them yield as well as a little bit of a protection. And so, from that standpoint, we do have people that are asking for it all the time, and we go and ask our counterparties if it's something that they'd be interested in.
Wow, you guys are out there sourcing options liquidity in XRP. I got to imagine a lot of those are on the protective side, maybe around the 10 cent. Hopefully they hedged at 20, maybe even 30 cents if they were savvy. I got to imagine a lot of those are leaning towards looking for some downside, sir.
Yeah, you have that or yield because they're sitting on large holdings. One of the difficult things on the XRP universe is it a security? Is it a commodity? And, where the SEC falls. It's very easy with Bitcoin, obviously, and then to some extent with ETH. But then when you start to fall into those other categories, we have to be very cognizant of what we're doing regulatory wise, because securities laws are a lot different than commodities laws. But yes, the people who are coming into the space are, they're looking for either protection or they're sitting on a large treasury and they're looking for ways to produce a little bit of yield on that without having to liquidate the asset.
It's interesting. You call yourselves DRAWBRIDGE lending, but a lion's share of your day sounds like it's out there sourcing liquidity in some deeply illiquid crypto derivatives. And maybe you want to add an addendum to the name, DRAWBRIDGE lending and liquidity hunters. How does that sound?
Well, sometimes we just go by DBL Digital, so that makes it easier for people who are looking on the yield side to differentiate, where we're not necessarily loaning, but we're helping you find liquidity, helping you put on structures that are advantageous.
How about just crypto hunters? We just drill it all down to the soup to nuts there. How about that? I like that. I don't know, getting a little reductive there. How about that?
That works. We've got the bright orange color, so we're ready for option season.
I like it. See, you come on the show, you get free branding advice. Who knew? But it's time for you guys to give us all your advice and your questions and your comments, and you sure have a lot of them. Let's get to a little bit of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the Crypto Questions, a portion of the show where we, surprise, answer your questions, take your comments, all your insights, your pearls of wisdom. You guys know how to reach us. You guys can get the show live, usually after the option block, about an hour or so after the option block, via our Mixlr live stream, or after the fact on your device of choice. Love to see all you new folks continuing to discover the program and chime in. We're always going to do big numbers in your Chicagos and your New Yorks and your Londons and your big market areas. But love to see on a show like this in particular, flares and explosions of interest in non-traditional market centers out there in the land where crypto is hot, or maybe the mining centers and things like that. It's always fun to see the new folks continuing to discover this program, and as a result, the network as well. So hopefully we're broadening your horizons in a lot of ways out here. Let's see what you guys can do to broaden ours here. Let's start off. This is a comment from Daniel J. Terry 1. So Daniel J. Terry the first. He says, I think people thought Bitcoin would soar in times of crisis. Yeah, you and probably a few others out there, or at the very least, maybe not be inversely correlated like you're alleging here, but at the very least kind of played to the beat of its own drummer a little bit, be a little bit more, non-correlated out there. And yet we saw pretty much exactly the opposite. We saw it selling off even more, even in a much more extreme fashion than we saw even in the broad equity space. Now, some of this, as Jason alluded to at the top of the show, is probably some forced liquidations out there. We know Bitcoin and others a little bit more susceptible to some of the whales and what they have to do than other asset classes, so that certainly could be to blame. But still, I don't know, Jason, have you heard similar comments or complaints from a lot of your users out there who maybe were thinking of crypto as a much more uncorrelated asset class than, at least over the course of the past weeks, than it turned out to be?
Yeah, absolutely. I think that's one of the things that you hear as a complaint or a concern, is that it seems like this non-correlated aspect of it broke down. And I do think that, like you said, correlation goes to one in events like this. So that's not unsurprising. People are selling every asset that isn't, nailed down. But I do think that structurally some of these forced liquidations that people went through really exacerbated that problem. So, I don't think that if the stock market is tracking down, in this situation, Bitcoin is probably going to track down too. But then when margin calls are triggered and people start to liquidate, I think that just forces things lower, especially at a time when, people don't have cash to spend, so they can't even really defend the price action. If they're getting killed in equities and all of a sudden, that Bitcoin appears to be at a level they'd like to buy, but what are they going to buy it with? And so I think that's part of the issue.
Yet another argument to have a little volatility in your back pocket for times like this. It's the only asset class that really performs in these types of environments and performs reliably. But I digress. That's a conversation of some of our other shows. Speaking of our other shows, we had Bill Ulivari from Central Capital hosting with me on the show last week. He termed it, I believe, last week, and probably would agree this week as well, even more so, that the recent movements in Bitcoin, I think he termed it, were, quote, disappointing to a lot of the long-term holders who thought this would be a new and unique and indeed uncorrelated asset class. So far, at least, not turning out that way, at least at the moments when it really counts. He chimed in again this week as well on our discussion about the trading floor. He said he thinks it's a really, really bad idea closing the floor. Let me get to that really quickly as well, because obviously this plays over into the crypto space now as well. We've seen kind of unprecedented steps from the major exchanges out here, particularly on the derivative space over the course of this past week. CME announcing they're pretty much closing their trading floors earlier last week, which, as we've seen so far, hasn't really hurt the futures volume at all. It's all going up on Globex, and it's all pretty much fine. Options have been light, but they've pretty much always been light, so that doesn't really change things either. SIBO also shutting down their trading floor, which if you trade a lot of institutional equity options like SPX or VIX, that's a big deal. And so we asked you guys, I'm curious what you guys think. Think we'll ever see these floors reopen? No dates have been given at this point for even when they're considering reopening again. Will they both reopen? Will only CME reopen? Will only CBOE reopen? Or no, open outcry is dead? So far, our audience is skewing fairly optimistic, about 55% saying yes, both will reopen. Only about 2% saying only CME will reopen, which I think is the underdog in that one. If you're going to pick one of those two to reopen, probably the SIBO. They have much more skin in the trading floor game than CME does. Only SIBO will reopen, about 9.6%, and about 33.7% saying nope, open outcry is dead. If you want to play along, add options is the place to go on Twitter. You got a few hours left before that one's in the record books. I'm curious, Jason, as a former member of both, what are your thoughts out there on whether we'll see these trading floors come back ever, and then any impact? Doesn't seem like it's really impacting the crypto liquidity on CME right now, but any impacts you maybe think we'll see in the long term from these trading floors shutting down, at least for the time being?
I think that they'll eventually open up again, even if it's just for a short period of time, for a variety of reasons. But I do think that, with this algorithmic or computer trading that's become so commonplace now, you do see things get out of whack. And I'll tell you a story, non-crypto related. A friend of mine said he was able to buy a calendar spread in the S&P complex last week because someone was buying a lot of March puts and forced that March put wing so high, he was able to buy the March-April calendar for a credit. So that's computer driven, and that's an inefficiency that should not exist when you break the iron rules of options. And so for reasons like that, I do think there's a need for it, and they will open it for a time being.
Yeah, we're hearing similar stories in some of our other shows, being able to leg into far out of the money SPY put spreads for credits, absurd things that should not exist. And part of that is the fact that we're all pretty much in the option space almost entirely in an electronic environment. You're going to see a little bit of liquidity issues and pricing issues as a result of that. And, of course, we're in fast markets as well. So that combo makes for some interesting opportunities. So perhaps if you're a little deft on the trigger finger, maybe these are times we're hearing crazy things like things trading below parity and all sorts of things that shouldn't happen in sane markets but are happening right now. Next up, we've got Beltor. I like that. Sounds like a sci-fi character. Beltor saying, I think this market is an argument that anyone with size crypto holdings needs to have some puts in their back pockets for times like this. Well, I wouldn't argue with you, certainly given what we've seen, the fact that there are no real structures in place to protect us on the downside like we see in the equity space. We know in the NYSE, over there on the S&P and the NASDAQ and all these other large indices that there are stopgaps in place to at least give us some pause. But we don't have that in the crypto space. And so as a result, that probably makes the argument a little bit stronger to have some of your own stopgaps in place. I'm going to go out on a limb, Jason, and say you're probably not going to disagree with our fan here, Mr. Beltor, that you probably think everyone out there should probably have some puts in place. And if so, maybe they should call you guys to do it. What do you think?
I think that's a great idea, and I couldn't agree more as far as needing to have some protection or at least being responsible in how you approach your portfolio in this asset class. It's the most volatile asset class in the world, and using derivatives as a way to protect yourself is certainly a very prudent course of action.
Next up, we got a question from Tony. We kind of touched on this on the top of the show, but Jason, if you have anything you want to add, feel free. He's asking, how is liquidity holding up in crypto options in these crazy markets? You were just breaking down for us, Jason. You're even out there sourcing puts and things and things like XRP, which don't really have a viable options market on them. So we kind of addressed this earlier, but anything you want to add here for Tony and anyone else who's kind of interested or concerned about what kind of size you're seeing out there in the crypto derivatives these days?
Well, like anything, your volumes your liquidity tends to shrink in times of stress like this. But I think that it's growing, and I think it's going to continue to grow because traders are opportunistic, and they will find areas where, when you're looking at an implied vol or a realized vol that's north of 100, that can be attractive to a talented trader.
All right, we've got time for a few more here. Let's go to Bitman, or maybe Bitman. Likes his bits. Bitman says, can you discuss OKEX options trading on the Crypto Rundown program, please? Thank you for your fine program. Well, we kind of did that earlier on the show there, Mr. Bitman. I can break it down for you again if you like here really quickly. I mentioned the big day for the OKEX folks was last Thursday. Seems like they did their biggest day ever, did 43 million worth of notional out there. If you're wondering, the previous most active day was on Monday with about 25 million, and then it kind of falls off a little bit from that. 21 million on the 13th on Friday as well, and they're doing so far today about 17 million, so a pretty decent day out there for the OKEX folks. You got to go all the way back out to February 26th to find another day of about 17 million out there. So they're coming online. Back on the 16th, they did about 3.7 million worth of notionals. So February. So in about exactly a month, they've done quite a bit. Their notional has grown substantially. While we haven't seen similar growth out of CME. I thought we'd see a similar trajectory on the CME contracts. At least so far, we haven't. So interesting stuff out there. But yeah, 43 million on the tape out there. Again, we don't talk about it as much on this show because it's a difficult venue for a lot of our U.S.-based audience to really access. And if you have to tunnel in with the VPN and do some of the other things, I know they're doing some workarounds to try to make that more viable for U.S. audiences, but for now it's still not exactly a big venue for the U.S. audience. We don't talk about it a lot, I should say, but the volume's growing. They've usurped LedgerX as the number 2 venue out there. So it's definitely one we're going to keep an eye on there, Bitman and everyone else out there who's interested in such things. Nance wants to know, why no BAKKT paper? I'm assuming you mean the options? And yeah, let's pull it up really quickly to see how much BAKKT has going on from an options perspective. And you know what? It's pretty hard. It's pretty much, for most of these days that they have data on, it's pretty much zero. So there's really no notional trend. I think there's about 100. Let me pull up the OI really quickly. Yeah, from the OI on BAKKT is about 155,000 worth of notional, not contracts. That's notional value, so not even a million. So it's pretty much non-existent right now. They just raised 300 million, so they have some assets to put to work to try to grow that. I'm sure that's what that new CEO wants to do. They were first out of the gate to beat CME to list a physically, or anyone really list a physically delivered or settled type contract from an options perspective. So interesting stuff out there. Whether or not they can persist, I suppose, will be interesting. Maybe LedgerX might have been in that dog race as well. Opponent, we'll have to see timing-wise. But they certainly beat CME to the punch in terms of listing options out there. And unfortunately, they got a lot of excitement when they first listed, and that was kind of about it. All right, let's wrap it up with a comment. A lot of people can probably get behind this from listener Jay Bread. I like that, Jay Bread. He's saying, I'm tapping out of crypto for a bit until things get less volatile. I can't fault you for it. I could argue with you, say, hey, stay in, put your hedges on, but the hedges are going to be very expensive right now. The horse has kind of already left the barn in that capacity here. So if you're out there and you're taking a little bit of a break, I can understand it. It's also a good time if you are savvy, if you are deft, if you're quick on the trigger finger, to be able to look for some interesting opportunities because they are there. But again, these are very short term. I only really recommend them for the more adept, the more astute out there, particularly in the derivative space. So if you want to just sit back and cash for a little bit and let these markets settle down a little bit, I certainly wouldn't hold it against you out there. All right, and hopefully you won't hold it against us. So that's the end of our show. You guys, I know, love it. You want more every week. You want longer shows and all that stuff. We'll get you more. Don't worry. other shows popping off on the network to keep you busy as well. You know where to find all those. TheOptionsInsider.com is the place to go, or just find us on your favorite podcast provider of choice, your iTunes, your Pocket Tunes, your Spotify's, wherever you want to go. You can just get this show. You can get the full network up to over a dozen programs at this point. So we'll keep you busy. We'll keep you informed, hopefully a little bit entertained as well here in these mad markets. We all got a little bit more time on our hands as we're all kind of self-isolating. So, hey, we got a podcast for that. So check it out. Got more than a few. Keep you entertained, informed, see what's going on. If you're worried about volatility in any of these markets, we got you covered. And before we go, let me go back and thank our guest, Jason, here from DRAWBRIDGE Lending. Jason, if folks are intrigued by what you do and judging by their feedback, it sounds like they are intrigued in that neck of the woods. They want to come over to DRAWBRIDGE Lending, or as we're calling it now, Crypto Hunter. I just like the sound of that. Where should they go? What should they do, sir?
Come to our website, drawbridgelending.com. Sign up, and we'll one of our associates will reach out and can open up a conversation.
There you go, drawbridgelending.com. Is there a social media handle they should follow as well?
Just come to the website, and we'll take it from there.
There you go. Come to the website, drawbridgelending.com. I was just kidding about Crypto Hunter. I have no idea who owns that. Don't go to that one if you don't know what you're looking for there. By the way, they're Twitter at DRAWBRIDGELend over there as well. And on behalf of Jason, Anna D, myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions and comments. Keep them coming. We love hearing from you guys. And we'll see you back here throughout the rest of the week with more great shows on the old network. And then right back here again on Monday for more of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.